Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from social medias. Today, we are covering Magna Mining, copper nickel development company with assets in Sudbury, Ontario. I'm joined by their CEO, Mr. Jason Jessup. Jason, welcome back to my show. Always good to have you.
Yeah, well, thanks. It's great to be back.
Thank you. You were in my show, I looked 9 months ago, and I have been following your work since then. This is a very successful story, and I have to commend you and your team, of course, for really impressive achievements in such a short period. I believe that the market cap of Magna was around 60 or 70 million range back then when we last time spoke. And today your market cap is almost 300 million, 280, something like that. So that's a 4 to 5 bagger. That is very, very impressive. So really, congrats. Definitely one transformal move was, let's say, a buy of a producing copper mine recently. Not so recently, it was in September, if I remember correctly. So let's start with that. Tell me more about this mine. I know that you are familiar with that mine from FNX days, but please share to me and to my audience some info, production numbers, grades, infrastructure, cash flow. The floor is yours.
Sure. And yeah, it's been a quite a wild ride over the last 9 months. Just to kind of give my opinion on why we've been successful and
Sure.
why our share price has responded so well over 2024. We set out with a number of goals, and I've tried to communicate these the best I could, over the last couple of years without specifically saying we are going to acquire certain mines in Sudbury, and these are the mines. But we've always talked about, advancing our projects here, our Shakespeare and Crean Hill, about, performing exploration and looking to make discoveries and also to make additional synergistic acquisitions. And we had specific items in relation to Crane Hill in 2024 that were, communicated in getting our permits and getting our selling agreements. We did that. We completed our bulk sample. And then in September, we announced, as you mentioned, the acquisition of a portfolio of properties, including the producing McCreedy West mine from KGHM International. And these projects are right here in Sudbury. And as you mentioned, our team and myself know these assets extremely well. They are the former FNX assets. And before I founded Magna, I was part of the FNX and then Quadra FNX team before KGHM bought them. So I operated the McCreedy West mine, I operated the Levack mine, and these are two of the properties that we will be acquiring. Now, the acquisition hasn't closed yet. We're working towards closing that in Q1 of 2025, but we're really excited about it. So the McCreedy West mine was a past producing Inco mine that operated from, I think they started developing in the early 70s. It operated up until the late 90s. It went on care and maintenance. It shut down, and FNX acquired it in 2002, along with four other past producing mines and properties in the Sudbury region. And FNX was a junior company. It was actually called Fort Knox Gold back then. And they were able to acquire these non-core assets, which really Inco at the time, they were sort of the least interesting properties they had in Sudbury. But through some good entrepreneurial mining and some exploration success, and also, some rising metal prices through the 2000s, FNX was able to bring three of these mines back into production, with McCreedy West being the first one. I joined McCreedy West in 2005. At that time, we were producing about 300,000 tons a year, so just under 1,000 tons a day. And through 2005, 2006, 2007, and into 2008, we increased production year over year at the McCreedy West mine, where in 2008, I believe we produced around 720,000 tons of nickel, copper, and PGM ores from three different deposits at the McCreedy West mine. And I got to tell you, it was a really fun part of my career. It was exciting. We have a great culture at FNX and at the McCreedy West mine. And we produced a lot of the cash that was used to restart the Levack mine, as well as sink to shaft and develop the Podolsky mine. So McCreedy West was really, we always said, is that little engine that could. It wasn't the biggest mine in Sudbury by any means, but it was a mine that continually replaced reserves year after year after year and has been operating almost continuously since 2003. It had a couple brief pauses, but almost continuously over all these years. And when we announced the acquisition back in September, we also announced an NI 43-101 resource for McCreedy West that we completed. And, its current resources stand at 9.3 million tons of resource over those three deposits that still remain. So in 2023, McCreedy West produced about 317,000 tons from their copper zone, which is called the 700 copper complex. And that was at a grade of about 1.6% copper, plus a little bit of nickel and a couple grams of precious metals. And, I can't speak to the financials and all of that because it's not audited and we don't own the property right now. But what I can tell you is, when I was at McCreedy West Mine back in 2000 and, 2005 to 2008, we were mining more selectively from the 700 complex. It was just one deposit that we were mining. We were also mining the PM zone, which was a precious metal rich footwall zone, as well as the intermain nickel zone. But we were mining at 4+% copper out of that zone. So there is definitely potential to increase grades at the 700 complex. And I think there's also potential to mine more tons than what is currently being mined. So we're really excited. We're working with the team at McCreedy West right now, pre-closing, to develop a budget for next year that, we see an opportunity to invest a modest amount of additional capital to increase production, perhaps tighten up some of the stoping to increase grades, to mine a little bit more selectively, but still looking to overall increase more metal pounds and hopefully get McCreedy West by the end of 2025 to sort of an optimal production level that is sustainable and we can carry forward. And that's going to be our focus. But I got to tell you, it's not the only property that I'm excited about in this portfolio.
I
and,
know.
and and I'm not forgetting about Crean Hill or Shakespeare, which I also believe are spectacular properties. But the Levack mine is a mine that I didn't fully appreciate until 2009 when I went over there from McCreedy West to lead the team to develop what we call, it was the Levack footwall deposit, which later was named the Morrison deposit after Gord Morrison. And Gord is he's a legend in mining exploration here in Sudbury. He has discovered over a dozen deposits, and many of them have been mined. Some are still being developed right now and being mined. But he led the exploration team for FNX, and he's part of our advisory team here now. But the Levack mine has mined over 60 million tons from underground of high-grade nickel and copper over its more than 100 years of production history. So it is truly a world-class tier one mine.
Yeah,
And
definitely, and the game changer for your company. I mean, future cash flow from that project will push the other projects as well. So definitely game changer, right?
absolutely. For us to go out and acquire a producing copper mine, and we're calling it a copper mine because our focus right now and what has been for a number of years there is focusing on the copper zone. So more than 70% of the revenue comes from copper. So it's a copper mine with a lot of exposure to nickel and precious metals. But to do that without having to incur, a lot of debt or any large dilution to our company is pretty remarkable. So maybe to get back to some of your listeners, what does this transaction, how did it work? So we're acquiring the producing McCreedy West mine, Levack and Podolsky mine, which are in care and maintenance, and then 5 exploration properties, including the past producing Kirkwood mine, which we think is tremendous. It has all the potential to have a significant footwall deposit, and there's already been a number of holes drilled on surface that have identified a zone in the footwall that is high-grade copper and precious metals, but really hasn't been fully explored. It starts right at surface. But we've acquired those 8 properties for $5.3 million cash on closing, $2 million in Magna shares, and then a deferred $2 million cash payment on December 31st, 2026. As well as there's some contingent payments totaling 24 million based on the 7 non-producing properties when they are declared into commercial production. So down the road potentially.
It's a
But
sub 10 million, right, altogether.
yeah, 9 million of cash and shares over basically 2 years. So pretty remarkable, I think, for us to
Agree.
do this. Now, KGHM's been great to work with. And people might ask, well, if it's so great, why are they selling it cheap? Much like how Inco sold FNX these properties before, when you're a very large company, you can only focus on the biggest, best projects you have. And for KGHM, these projects were not big enough to be material to them. So we see this often in our industry where people divest, big companies divest properties, and in the hands of a junior company, these can be very significant properties. And I view this and my vision for the company is this is our pathway to become a mid-tier producer by having cash flow that we can optimize McCreedy West, and it's going to take some work and it's going to take most of 2025, but to optimize McCreedy West and to be able to use that cash flow to restart Levack, to develop the Crean Hill property, potentially restart Podolsky mine, and then using cash flow down the road, potentially get forward-looking statement, but to do that and then say, now we have significant cash flow, let's say 4 years from now, and then to go and build our own mill at our Shakespeare project and have our own mill producing nickel and copper concentrates, mining the open pit at Shakespeare, perhaps blending some other ores from Crean Hill or elsewhere into Shakespeare. That is our pathway, I believe, to becoming a mid-tier producer. And at that point, we could have some very, very significant cash flows. So that's the vision. That's where we want to go with this. This acquisition is something I've been working on since really 2015 before I even founded Magna. But it has always been the goal because I saw that these properties had come full circle. They were non-core to Inco. They were, flagships to FNX. And for those who aren't familiar with FNX, FNX started off, a sub $1 company. By 2007, in the height of the nickel market and the copper market, was a $39 company, got bought for $15 and 1.5 billion in 2010 to become Quadra FNX. So I saw there's a tremendous amount of value can be in these non-core assets in Sudbury, but by 2015, the writing was on the wall when I looked at KGHM and these properties. They had shut down the Podolsky mine. I could see the writing on the wall to close Levack. They were non-core to KGHM. There was the opportunity. They had come full circle. There's an opportunity for another junior to come into Sudbury, and I think create something even more exciting than FNX was. And that's what we're doing. So this is exciting times for me. And I've been getting out and talking to people about this because it is a great story, an exciting story, needs to be told. And we've seen a lot of buying in the market, and it's resulted in a great share price.
Definitely, it is with this land deal. I mean, the land over there is held by the major companies and Magna, of course. So, is there any actually room left for expansion or some M&A in the area?
Yeah, like there's definitely potential. And I wouldn't say we now with this acquisition have acquired all the non-core assets. There's a number of other deposits and properties we see in the Sudbury Basin that maybe don't fit with their owners. And we have great relationships with the three major companies that are here in Sudbury. As I mentioned, in previous interviews, our Crean Hill property, we negotiated an ore selling agreement with Vale. And I would, consider Vale a good partner to work with here in Sudbury. Vale is the largest mining company that's operating here in Sudbury, has the most mines operating and the largest, I would say, productive land package in the basin with the largest amount of resources. So what is material to Vale base metals, and what's not material, could fit potentially very well with Magna. So there is potential for other growth in Sudbury in the future. Right now, we have a lot on our plate. So it's not our primary focus by any means, but once we have demonstrated that we can operate McCreedy West successfully, we can supply ore to Vale's mill, as well as potentially Glencore's mill because McCreedy West has an ore selling agreement with both Vale and Glencore, which each operate underutilized mills in the Sudbury Basin. It really opens up opportunity then to, have these discussions on how else can we work with the major companies here. So there is a lot of M&A activity, and we're based right here in Sudbury. I live in Sudbury. I've been here since 1999. Our head office is in Sudbury, so we're very close to the action, so to speak,
Yeah.
and very close to the players that are here.
Yeah, let's talk Shakespeare a bit. You have permits in place for the mine and tailings facility over there. Give me an update on Shakespeare and what are the next steps for that project?
Yeah, so it was the first property we acquired with the acquisition of Ursa Major Minerals back in 2017 when we were just a private company. It does have major permits in place for the construction of an open pit mine, a mill and tailings storage facility. It has a feasibility study we completed in 2022. So it is, essentially ready to go, subject to funding. Now, in 2022, the feasibility study estimated the capital cost at about 233 million, which, when we went public, we were a 20 some $1 million market cap company. That was a pretty big price tag. As an almost $300 million company, it's getting much more manageable, but we see a tremendous amount of opportunity right now to focus on optimizing McCreedy West to try and maximize sustainable cash flow from that mine. And then between Levack and Crean Hill, those would be, in our view, the next two properties we'd want to move forward. So the best way we believe to progress Shakespeare into construction will be from, utilizing a lot of cash flow from our other operations. So it is probably a construction decision is at least 3 to 4 years, I would say, down the road, as it stands right now. Now, something could change, but that's what we're thinking right now. But that doesn't mean we're not actively working at Shakespeare. So we've been drilling there for most of 2024. I'm really pleased that earlier in November, we announced a new copper discovery about 1.5 km away from our Shakespeare deposit. We call it our Southwest Copper Zone. Again, it's a one hole we drilled, and we had been systematically drilling off exploration targets across this large land package. There's about 180 square kilometers around Shakespeare that we control. And there was a number of targets that just really had never been well explored. So we had done a lot of geophysics. We had done a bunch of ground truthing and mapping, sampling on surface. And this is one of the areas that, we have been systematically sort of testing what we thought were the best priority targets this summer. Had some minor successes, but this hole we intersected very close to surface, 32 meters at 1.4% copper, with about 14 meters of 2.3% within that. Underneath a surface showing where we had samples up to 7% copper in grab samples. So it is a interesting target area. Had never been drilled, no record of any drilling there before. So we are following up on that right now. And again, it's too early to say whether this will become something that in the future could be a satellite deposit to Shakespeare or not, but it does show that there's potential. So Shakespeare continues to be a great exploration property for us while we wait to make a decision on construction.
Okay, but you have already some early exploration plans for 2025 on both Shakespeare and Crean Hill, right?
Yeah, well, we're putting the budget together right now. So we're going to drill up until, sometime in December, and then we'll take a break for the Christmas holidays. And, over the next 3 to 4 weeks, we're going to be finalizing our budget for next year, and where we want to put drills. Now, obviously, with anticipating closing the KGHM Sudbury transaction in Q1, that's going to reprioritize some of our exploration efforts because there is some, I think, very high priority targets we want to get tested at some of those properties. So our plans aren't firm yet. I guess that's the short answer. Our
Okay.
plans aren't firm for 2025 where we'll start drilling. I would say there's a very good chance in Q1 during the winter we will have a drill out at Shakespeare. We will have a drill at Crean Hill most likely, but we're still working through all those details.
Okay, but you are financially covered for, I believe, majority of the work. You closed the big financing with almost $22 million raised. What is the financial plan going forward?
Yeah, and again, some of this will be driven by our budget and how many drills we want to have turning and how quickly we want to ramp things up. So there is some, some details to be worked out, but we did close a $21.8 million financing at the beginning of November. And that financing, really, we set out to raise 15 million just to have some cash in the bank to get started on exploration and have some funds to move things forward in 2025. But we had such demand that we ended up upsizing it to 19, and then there was a 15% over allotment that the brokers also filled, and there was more demand beyond that. So that was, yeah, a great show of confidence, I think, from investors. And we brought in a lot of new investors, as well as having some of our core investors like Dundee Corp participate pro rata on that as well. So it was, yeah, it was great financing. So now we sit, well cashed up to move into 2025. And yeah, now it's to really work out the details of our budget to how we're going to use those proceeds to grow our company.
Right. You answered a portion of my next question with the share structure. How is it now looking after the financing? So you got some new names in the share registry, and have the existing shareholders and the insiders participate in the financing?
Yeah, we did. We actually had a great participation by insiders. As again, Dundee participated in that. Hawks Point, which is our second largest investor, which is about 11% of the company, participated as well, pro rata. Some of our longest term investors, such as David Elliott from Haywood Securities, and David was one of the seed investors, has participated in all our financings, including this last one, and continues to be very supportive. Myself, I participated in this financing as well as I think at least 7 or 8 of the Magna team here, our executives and management team. So yeah, we're very supportive, and I think that anyone that's on SETI would have filed that, and people can look that up.
Yeah. Jason, what is the end game for the company? Or better question, where do you see Magna in 3 years from now?
Yeah, so I think the next 3 years we have a great vision, and I'll call it probably getting close to a solid plan. But really, it's about optimizing our McCreedy West to maximize cash flow going out into 2026 and beyond. Using that cash flow in 2025, we're going to build a restart plan for the Levack mine, which we are hoping to execute in 2026 and potentially could be done primarily from cash flow from McCreedy West. As well, we're looking at financing options for development of the Advanced X program at our Crean Hill property, which has all the permits in place. And we completed a PEA recently. So in 3 years from now, we would expect to see McCreedy West at a sustainable, long-term optimized production rate. We see Levack moving into commercial production, and Crean Hill probably beyond advanced exploration and moving towards commercial production as well. So that's what we're looking at and concentrating on right now. With that, we look to have a healthy exploration budget year after year. And there's never, ever a guarantee in our business that you're going to make a discovery.
Yeah.
I will be very disappointed in the next 2 years if we can't announce a new discovery, a real deposit. We're going to invest the capital, and this year we're going to spend somewhere in the range of $6 to $7 million on exploration. I would expect our budget going forward to be, somewhere in that range. So with that much exploration being done on properties we're so familiar with, and where our team has made discoveries in the past before, you were pretty excited about that potential. So the next 3 years should be pretty exciting.
Okay, how is the nickel market looking today?
Pretty bad. I think it's sort of in a low, right? It's in that trough. And nickel is very cyclical. And I think we found the bottom, and we've tested it a couple times at around $7 US a pound. It seems that there's support there, and I think that it will rebound, and it will rebound probably pretty violently. And it could be for a number of reasons. It could be because of political sanctions. It could be because of heaven forbid, a natural disaster or something to that effect. But any kind of disruption to the Indonesian nickel market will have huge ripple effects. Anything to do with supply, even to the LME, will have huge ripple effects on the price of metal. So I don't know when it'll happen, but I would estimate that, we're probably right now sort of at the lowest part. So anybody that, has followed the nickel market and believes in the nickel market and is a bit of a contrarian investor, now is probably the time that you want to start slowly accumulating your position, in my opinion. And I'm not a financial advisor, but that's my opinion. So yeah, where the nickel market's going to go, I think that it can't really go much lower. I don't see that happening. And I do see, much higher than $10 in the future. Whether it's going to be sustainable for years on end, I'm not going to predict, but I believe we're going to see, up to the teens again in the next 3 to 4 years. And it'll probably get, go a little bit too high, get pulled back a little bit, more supply will come online, and it'll keep playing that up and down. But demand for nickel is growing. That's a given. That's a fact. Demand for nickel is growing. Even in Indonesia, I do not see their prices getting lower, their costs getting lower. I think that there will be more remediation and environmental protection baked into those costs, which over time is got to reflect in sort of their operating costs and their cutoff grades. And that will have to, I think, drive prices higher overall. So that's my opinion. But again, in our operations going forward, we are really focusing on copper with the ability to turn on nickel when we decide to. So, for example, at the McCreedy West mine, they're focusing on this footwall copper zone, the 700 complex. But it also has this intermain deposit, which is a deposit that FNX mined for a number of years. It's developed, so there's stopes ready to go, and that can be turned on very quickly. And there's been a little bit of mining done in the last year by KGHM. We'll evaluate that, but right now what we see is better margins in copper than nickel. But when nickel price does rebound, we can turn that on in weeks. So we can start shipping. And because we're selling ore to existing mills, it's simply notifying them that next month we're going to start shipping you, some nickel ores. So it is a great optionality to have. But, FNX really made a lot of money on nickel when nickel was high, but was acquired by Quadra to become Quadra FNX because of the copper, because of these high-grade copper footwall deposits. And the reason that KGHM acquired Quadra FNX was for copper. So everybody associates Sudbury with nickel, nickel, nickel. And although it is a big nickel producer, these properties in particular have a lot of copper, and that will be our focus, at least in 2025.
Yeah, I got to say that Magna and FNX looks similar, right?
Yeah, there's definitely similarities. You can't
Yeah, yeah,
mistake
yeah,
that.
yeah. Jason, final question. News flow from the company. What and when can investors expect some news flow from the company?
Well, so drilling, we are drilling at our Southwest Copper Zone. So we hope to have results back in December. And so we'll release those when they come back. And we probably won't release one hole at a time. We'll wait till we have a number of holes back. So that'll be coming. That drilling's ongoing. There's other drilling we've done at Crean Hill. So there's more drilling results to come. We expect to be giving some updates on our progress in December as well towards closing. And there may be some some new news that comes out of that we are pretty keen to tell, but we can't say quite yet. And the one thing that I think we often do is we often surprise people with news that they had never expected. So we will have news coming out over the next 6 to 8 weeks, and we are working really hard to get this deal closed. And with closing the deal, we do expect to be able to talk a lot more about results in 2024 from the McCreedy West mine. So the drilling they've done is not included in the resource. And some of that drilling we're going to have some influence on before closing. And so there'll be some results coming out that I think will be very informative to investors. We'll be able to talk about our plan for 2025 in a lot more detail. as the owner of those properties once it closes and give some guidance on the future. So I think be lots of exciting news coming out over, call it the next 6 to 8 weeks.
Okay, so people stay tuned. This was Mr. Jason Jessup, Magna CEO. Jason, thank you for coming to my show, and I wish you luck going forward.
Well, thank you very much. Great talking to you, and let's not wait 9 months to catch up again.
Agreed.